The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to the Power Trading Hour with me, your host. And it's an interesting day down here. I thought about bringing the car here today, and I decided to open the other slot on the garage and bring the submarine, because that's all you needed on the way out here. It is raining cats and dogs. It is a frog strangler. It's like a giant cow on a flat rock. If you ever grew up in the or wherever in the Midwest, you know exactly what that would be like. But it is raining absolutely extremely hard. Just really coming down, and it's, if I jump or scream here, I think it was following me out here to work today, and it was pounding, lightning, thunder, real wrath of God stuff. I was waiting for the frogs to start hitting the vehicle on the way out here. It was pretty hot. But today we celebrate our National Cheeseburger Day. Yes, a song was even written about it by Mr. Buffett, Cheeseburger in Paradise. The largest cheeseburger ever was made in the world, weighing in at a whopping 777 pounds, created June 2nd, 2011, in the Alameda County Fair in California. The absolute biggest hamburger ever. And of course, who can ever forget Mayor McCheese and the giant lawsuit between those horrible people that made the Saturday, just the worst Saturday cartoons and kids' entertainment forever. Trying to remember what it was, but it was those horrible Muppet-looking figures running around, but not even good, just horrible ones. Horrible shows, too. And, of course, they sued McDonald's over Mayor McCheese because he looked too much like H.R. Pufnstuf. Oh, boy. The trials and tribulations of being a hamburger and Mayor McCheese. It was actually settled in 1977 for an undisclosed sum, so Mayor McCheese could get back to his business. But today we celebrate the cheeseburger, maybe the world's most perfect food. Oh, I think someone already stole that for a banana. But I think, actually, cheeseburger may be the most perfect food. As always, you can call in. We take our calls at 877-927-6648, and we'll be a hamburglar for you today. Anyway, it is, it's Tuesday, isn't it? I forgot to change that again. The AMD CFO left yesterday, and the stock kind of tanked, at least for a while. We'll look at a chart in a minute. Just for those people that haven't been around for a long time, why do stocks normally take a pounding when the CFO leaves, especially if they're a low-priced stock? The idea is that maybe there's something rotten in Denmark. The CEO wants to get aggressive with the counting, or maybe he just sees that there's not a lot of future and he's decided to leave. A lot of people called in and talked about AMD, I think over the last couple of weeks or so. I said the reason I disliked them was that they were losing control of being able to manufacture against Intel. But a lot of people actually have that problem. The biggest problem is they didn't have anything to really compete with ARM's holding and Intel at the same time. Plus, they're having problems even building the chips that they have. Actually releasing a new chip, I think probably later this week, that looks to be at least acceptable. But they had a very thin window of where they could actually have worked, and the problem wasn't so much them as Taiwan Semiconductor could not get the kind of yields that they needed to make those chips, the A8 and the A6, really come out they came out fine, but they should have been probably, I don't know, 40, 50 bucks cheaper by now, and they just can't get it through when someone else is manufacturing a product that is that complex. Intel pretty much, I think, is going to have the monopoly on high-end chips here fairly soon, but we'll have to look and see what the chart tells us on AMD. But a lot of people worried and why it took a pounding fairly quick. Losers out there today, let's see what we have going on. Pretty sure that it was, what do we have on that Dow? No, it's, maybe it is on the Dow stocks up there. See if I can get what we have. I guess so. It's, we still have a few of them. Losers out there, Green Mountain, Coffee Roasters, Bed Bath & Beyond, Flexera, FLEX, Fossil, Netflix, Micron, Ross Stores, and Baidu for the winners out here today. FFIV, probably the biggest winner. RIM on news that Microsoft's going to license a tiny little thing from them. But of course, when you're 100% short, it doesn't take much news to actually get anything to pop. Same thing with Apollo. A dead man walking, just doesn't know it yet. WCRX, Pergo, PRGO, O'Reilly Auto Parts, ORLY, and NVIDIA winners today. We'll try to see if we can't check in with them fairly soon. IPOs this week, Trulia Incorporated, a San Francisco-based online retail listing company that is expected to begin trading on the New York Stock Exchange under the ticker TRLA on Thursday, September 20th. Other than that, pretty quiet market. I was kind of very surprised when we looked at the reaction to rumors today from Apple, and that I didn't see a whole lot going on with it. Made me very kind of nervous out here for the market. Of course, everybody was putting bells on and singing Kumbaya last night because Apple, after the bell, had gone to $702. Went to 701.44 as the high today so far, right around $700, but not getting a great deal of love. You can call me at 877-927-6648, 877-927-6648, and we'll be glad to take your phone calls. But what's the rumor? It is the iPad mini. Probably the worst kept rumor that Apple ever had. They've already ordered a lot of the parts. Basically, it's going to be the internals of the iPad or the new iPad, but in a 7.8-inch version instead of the, what is that, 10.1 or something like that, 10.5-inch version. So a whole much lighter, smaller tablet, but pretty much the same guts. Some people are wondering when this is going to come out. The best leak I've heard so far is that they're looking at somewhere in October, probably something like the 20th for a release, because they're thinking that Apple's going to introduce this at the same time they roll out some new iNano technology and some of the other small MP3 players. So they can always look at that. But that's pretty much it. I was kind of surprised that on that news it didn't move much, but you've got to realize that all these, even on the big iPad, they make about 50% of the margin that they actually make on the iPhone. So they have to sell twice as many iPads to equal one iPhone. Pretty tough, especially if they're going to cut down on this one. Are they going to be able to keep that same kind of margin? My guess is not. Normally there's a 3-to-1. You look at whatever the cost of goods is. Let's say it costs $100 in parts. Then you figure that the product's going to cost $299. There's generally in retail electronics a 3-to-1 just on the cost of parts. Still have to build it, still have to manufacture, still have to ship it, still have to put software on it. But normally the idea is at least getting a 3-to-1 ratio off from at least what they call the BOM, which is the bill of materials. But there's some pictures of it, which makes me think that once this thing's been smuggled out, and if you see the pictures, it is operational, that we are not too far away. So 30 days, probably a good belief that we'll see something before the 20th of October from Apple on the iPad mini, or whatever they would call this actual product. What did I wanted to get to fairly? I wanted to get to AMD and take a look at that real quick and to see if we see anything else. Had a nice drop and lots of volume already today. Looks like it's every event this thing's coming back to $3.43, and we'll have to see how it does. Probably the biggest problem right now is that it's a better off deal for at least power-wise to go ahead and buy the Intel second generation the Core 2 Duos, just because the battery life is so much longer, using a 22 nanometer technology and 3D stacking, stuff that AMD just can't do, because why they can design it, there's nobody to build it. There's only one fabrication company that can do that, and that's Intel, and they're already taking on contracts from lots of other people. I would not be surprised to see them even building a ARM-based product for Apple here in the not too distant future, using their technology. Get a big hunk out of that. But just a little bit of thought out there. We were looking at OIS over the last few days. I'm going to just check in on with that one. Again, if you want to give me a call anytime, 877-927-6648. That's 877-927-6648. And we'll be glad to take your phone call on whatever you're looking at here. This one looked like we pretty much thought this thing was going to roll over a little bit off of its high, and it's kind of pulling back. Not a lot of volume so far today to confirm, but still looks like we're going to have some level of thought on whether or not these are going to get one more test. Of course, this one's pretty good indication on OIS that we were going to have at least weakness in the crude markets and some of the other markets. Gold's flat today, but we do see that crude is off another buck, down to 95 and 95 and a half. So, but we also see that the dollar pretty much bouncing off that strength level, which is about 78.80, something like that. Memory serves me correct. Looking at the dollar index for Z2, which is going to be December, isn't it? It's got to be Z. $79.32 today, up about 21 cents. It's showing a little bit of strength coming off the bottom, and of course putting a little bit of pressure on the market. Not a great deal, but a little. In fact, when we check in, I wanted to see just what we have here for volume so far today. Volume 2.2 billion shares. Another day we're getting lighter volume. Market's off about 3.5 points on the S&P 500. No biggie, but it's expiration week, Jake. All you people that saw Chinatown. We'll be back in a minute. Give me a call, 877-927-6648.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we do have a caller, and it's John in Philly. How you doing today, John?
Hey, David. Doing well. Thanks for taking the call, sir.
Good enough. What are we talking about today?
Hey, well, you were just talking about Apple, and I've got a question about that as it would happen. David, over the years, actually in the past year or two, I've researched Apple and AT&T, Verizon, the two major wireless carriers, or the two with biggest market share. And I've always come away with a question I can't answer and get my arms around, and that is, when a smartphone is sold and a telecom service package is purchased, it turns out the annual spending for every handset it's pretty substantial generally. It might be as cheap as $300 and might be as much as $700 or $800, and I don't know what the average is. But my question is, how do when Apple and Verizon, AT&T are negotiating? How do they end up splitting that revenue that is included both in the handset, the hardware sales, as well as that telecom service fee?
And basically, Apple sells, at least to AT&T. I don't know about Verizon. AT&T split it out for some reason, and I think maybe because they've been doing it longer.
Okay.
They sell their version of the iPhone that takes a SIM chip for $650 to AT&T. So you basically, if they're selling it for whatever, it's whatever AT&T wants to eat. So if they're selling it for $200, you got to figure that there's $450 that's coming back in on the back end of the contract for them to break even.
Oh, I see. So you're saying on that particular model, at least in the recent past, AT&T is physically paying Apple the $650, and they might then discount that to the customers and eat it in the telecom service fee. Is that right? Do I understand that correctly?
You got it exactly right. I don't know. The number was right around $650 for the 4S.
Yes.
And I figure it's going to probably be fairly close to the same, maybe $10-15 more expensive for this version. But I think they're moving down the 4S. I think I saw something. It was either the AT&T guy, CEO or the CFO was talking about this maybe last week or right after the the iPhone 5 release. But he said it was going to be slightly more expensive. So their phones are slightly more expensive than others. I think Verizon doesn't use a SIM chip, and they're slightly less expensive. But then AT&T has expenses also, since they have a SIM chip in theirs. They have to buy the SIM chip programmers. The rest of the phones are programmed by the handset themselves directly by pressing buttons.
Yes,
so,
right.
I'm not exactly sure why AT&T went down that road, but they're the only one I think that uses SIM chips now. So, other than that, maybe it's $15 or $20 cheaper if you get one without a SIM chip or something from a different vendor. But it's got to be right in that $650. I know that that's basically what it is, because that's where the contracts have leaked at one time or another. I can't remember where they were at, but that's basically the way it works out. They sell them. The revenue comes in, I don't think, immediately. I think that the AT&T and those guys get like 180 days after they ship it to give them half or all of it back or part of it. So there's some kind of online financing from Apple on it. But when you break it down, they get $650 a piece for the 4S. And I don't know any more than that, but I think it's pretty much standardized across. And there's been some discussion of people trying to break that number down and get Apple to actually kill it, or bring it down. And Apple just says, well, if you don't want it, you don't want it. It's fine. So, and there's so many people that just have to have it that they've pretty much got those guys over. Now, I know for the contracts for the Samsung, the Galaxy 3 right now, it's more around $475.
Gotcha.
So, there's a considerable difference between the two. And I think part of that's the operating system. The license, I think, is only about $30 a phone from Google for each Android phone. And that is included, of course, to Samsung for them to manufacture it.
Sure.
So it's somewhere around $30 goes to Google. The rest goes to it. So you could figure that Samsung's getting, $440 for a Samsung Galaxy 3? Give you a good idea.
David, thanks so much.
You bet. Thanks, John, for the call. We'll be right back after this important commercial message.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we had a question in the den, which was just how much money does Apple get from, well, say, like the App Store and the iTunes and that per year on average. So it's about 20. I think the last good numbers that everybody has, I think, are for 2010. And in 2010, people were somewhere around $22 per device. So for at least for the iPhone, to give you an idea, of course, Android much smaller in that year. They've really come along in the last year. Was getting about $2 per user per year. I think that's you could probably. We'll have to look. I'll have to check it, but I think it was about I'm sure that's really caught up on the Android marketplace. But I think that's the last year you have for a full year. For Apple user, and they're probably in the sweet spot where they were making about as much as they could because they were, of course, the only game in town a few years ago. So not too bad. Monthly, about $2. I'm looking through some of the releases out here. That's pretty much it. Not a lot newer data than from 2010. And I guess that comes from the fiscal 2011. Probably get the 2012 yearlies on Apple probably in the next 45 days, I would imagine, maybe a little bit longer. So we'll have to take a look at that. Anyway, what else do we have? We're going to look at a couple of charts out here today. One of the ones I've been watching kind of closely has been LinkedIn. This has been the only decent social network stock out there. Always loved their business model a lot stronger than, of course, Facebook. They had built-in customers. They already knew how they were going to make money. Doesn't mean that they can't hit a high either. Had a nice drive here to the top, but looks like we've pretty much topped out in LinkedIn. When's their earnings date? Time and sales, headlines. Where's that at? Earnings date. There we go. I'll find it here in a second. Okay, end of this month. So I would imagine this thing's probably going to hang out October 29th on LinkedIn. So imagine this thing to be pushed and pushed and pushed. It hasn't been acting real strong up here, but probably a little too, well, I don't know, what do we got, 45 days? It still could have some action. But getting into the sweet spot where these people try to ramp it if the market holds up well, strongly, let me put it this way. One of the things you don't like to see is a market that's run by just a couple of companies and the rest of them doing poorly. Click and Clack giving us some pause that maybe these things have kind of had the best pullback from the downslide, in this case to the July 12th low in Kulik and Soft. Of course, they make all the machines that make chips. If people aren't making chips, they're probably not making anything themselves. Clack is the other one. How neat that you have Click and Clack. Clack is looking just a little bit better, which is KLA 10 core. But still, they got back up into the gap and pretty much rolled back over. But still, nothing that you would really want to write home about. The SMHs. Semi-control trust. Not looking too bad. Kind of looking at $32 and high 32s being at least some form of support out here, but certainly not giving us any real idea of whether semiconductors holders trust is. We were talking about Apple. Apple is now buying half of all the components in the electronics industry in Asia. So that's when I say you don't want to see one customer owning everything you do. When I first started with a company that I later started doing products, it was a division of Scientific Atlanta. They basically had a couple of companies, and they were all horrible folks in the cable TV industry. And the problem is you had 2 or 3 people, and if you didn't sell your set-top box to those 2 or 3 people, that was it. Now, we had products that we sold to the cable operators themselves, the local regional places that there were 10 times more of. And, of course, that was a much better business because it smoothed out. People would buy some in California. They'd put in a new location. Of course, even in the 90s, the cable network was still being driven out, and quality was still kind of an issue. But you don't like to have just one customer or 2 or 3 because then it's either feast or famine. And unfortunately, the semiconductor holders is kind of telling us that story. There's a handful of people like Qualcomm. They're getting a big hunk, and Micron, let's see, Qualcomm, out of that business. And, of course, Qualcomm looking fairly decent. I think you could almost say this is going to be a surrogate for what Apple does. But back up to the big gap down that Qualcomm's had, that actually came on volume, down on volume, and that was on, April 19th. On almost 42 million shares. We're back up into this range with about 15 million shares up against fairly stiff resistance. I think that's why we're probably seeing the same kind of action in Apple, which is getting to the $700 mark and saying, I don't know about that. Probably the worst part of Apple right now is the issue with them making a lot of these products that have far smaller margins than their iPhone and trying to do that. Even companies like Intel, a lot of people give them grief for not getting into the business of making these super inexpensive, cheap, and easily manufactured ARM chips that go in these smartphones. Well, the problem is, especially with when you're dealing with somebody like Intel, is how do you tell your shareholders that you really want to sacrifice that 65% margin that you're making, almost a license to make money? Even when you make a dollar bill, it probably costs 10 cents, probably $100, with all the other stuff in it. Maybe probably cost $1 to make a $100 bill, I would imagine. So even when you're making money, you don't have 100% margin. But in this, you've got 65% margin, almost a license to print money. Pretty darn good. But Intel, INTC, also has that same problem. Do you get into this low-margin business that's going to bring your margins down over corporate-wide? And, of course, the first thing people are going to say is, your margins are down. What's happening? You've lost all touch with reality. When you talk to the later CEOs after Steve Jobs died, in 1988, Apple was actually talking about licensing its operating systems and having people make Apple products and make Apple computers, and them just supply the software to it. The problem was, how do you ever get and tell people that your margins are going to fall fairly dramatically because now you're going to license your software out there? The market is not very understanding. It doesn't matter if you make actually twice as much money the next year. If your margins went down, basically Wall Street is nervous that you're actually hiding something, and one day they're going to get a giant surprise. So the first thing you can't do, especially in these high margin companies, is let your margin even tick down a penny, because everybody will totally freak out. And, there was lots of talk about that. I always wondered how different the Mac world would have been if they would have gone to that. And I think they were talking about it in 87, 88. And it just never happened because they were sure everybody would dump the stock and make it look like Apple was going out of business far before it was. We looked at LinkedIn, looked at ISS. See what else we have out here. TW Telecom, TWTC, not one of the bigger well-known names, but kind of another one that's looking a little toppy out here in the $26 range, and quite hasn't gone back up and retested the top. I suspect we're probably going to get that this expiration week. TWTC is the symbol for it. And as we take a look at that, kind of interesting. But we need it to test $26.17. Kind of a quiet week out here. We are waiting for options expiration on Friday. I suspect we're probably going to have some kind of little pop, maybe into tomorrow. A lot of times during option expiration week, they like to spike the market just a little bit and set the high on Wednesday afternoons. So I kind of always watch for that time frame to be looking at it. Other ones I wanted to look at, Microsoft MSFT, and take a look at it. Microsoft's still holding up as probably one of the better stocks out here in the marketplace. But we will take a look here. I wanted to look at a few other stocks while I get my stuff together and get the internet going here. I wanted to look at some of these that hadn't been doing too well today. BBBY, Best Buy, or not Best Buy, I can't even say it, Bed Bath and Beyond. I haven't been Beyond in a long time. Volume's not that big on this turnaround, but this is kind of the prototype for a lot of charts that I'm looking at now. That is high volume down, coming back up on lighter volume, coming back, trying to fill the gap as much as it can, getting awful close, and then turning back around. Again, volume is not all that huge, but continuing to watch these roll over as they come back in, and probably setting up at least some kind of trading range. Of course, Green Mountain Coffee Roasters, GMRC, another one taking GMRC. For some reason, I'm getting CR. Dyslexia Cure for found. Another one of the bigger movers out there on kind of a flat day for all practical purposes is Green Mountain Coffee Roasters. It had its move back up to basically the gap where it came down on monstrous volume. It's going to find tough sledding ahead. Got to a high of $33.15 on September 12th with 10 million shares as we continue to see this thing. But you still have a nice little gap down here at about 20 bucks. If something really doesn't significantly come out of this, probably going to see this thing in a trading range from the top of that gap back into that probably $18, $20 gap range. Again, you can always give me a call at 877-927-6648. That's 877-927-6648. We can discuss the stock that you want to. Still a few minutes left in this segment, and of course 5 or 6 minutes before the top of the hour. Let's see what else I was looking at here. I wanted to look at Ross Stores, ROST. We have another one that it actually went above the previous high. When we look at this one, June 19th, it hit a high of $69.46. We've seen that go above it, close back below it, which is a decent sell signal. Short about 400,000 shares. Once you got the close back below it, of course, it took a little time to roll back down. Where's this going? Pretty much, I would imagine, down to about 63 bucks, which is the bottom of the huge gap up day. That day had 4.6 million shares, so we're back into that candle already. It's going to start finding some resistance in that, but could get back down to that $64 level. What else? MU. Probably the big news on this was, I think that they were having, a lot of people were running rumors about them selling some more RAM for some devices. I don't think that came through. It's pulling back on lighter volume, but nothing really to yell or scream about. Let's look at the ones that were actually moving up higher today. The strongest stock, FFIV, the networking stock, it's kind of come off its highs from earlier, but another one hitting high volume down, and that high volume down day was on May 30th. That stock came down on fairly strong volume of 5 million shares. Coming back into that gap in area with about, 3 million so far today. Let's say we've come in with about 4 million. By the end of the day, we're still going to be short about 20% on that. So keep on taking a look at some of these and looking at these gaps because they're acting as fairly strong resistance no matter how much QE3 Ben Bernanke throws on us. He's just kind of like picking it up like a old nasty fruit that he found on the ground and throwing that QE around. Ugh. Anyway, F5 Networks, the biggest mover today.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we continue looking at some of the stocks moving today, this is the pattern I'm seeing. If you look at PRGO, just seems like almost ubiquitous in the marketplace, and that is huge volume down, back into the gap, and failures. This one is no exception. This one's back into the gap. I guess it's Perigo? I don't know how to pronounce it. PRGO. I don't hear them. They develop, manufacture, and distribute over-the-counter generic prescription pharmaceuticals, infant formulas, nutritional products, and active pharmaceutical ingredients, API. I never saw that before, worldwide. But huge volume down. That came on the 16th of July. Almost 3.3 million shares. We're getting back up here today. About a tenth of that. So we're seeing a lot of these stocks really get hit hard, come back up into these areas and start taking light volume attacks back into a lot of the market. See if there's anything else I wanted to look at before the Marvel, Vodafone, O'Reilly, O-R-L-Y, O'Reilly Auto Parts. Another one that kind of faded. It was up a little stronger here before today, but still what do we have here? Up 1%. It kind of fell off. It was up at the high of $82 today. And kind of come way back down now, $81.15. Given back about, not quite half of the bounce out there today. That wasn't on a whole lot of volume. Still looks like it wants to come back out here and test this high volume low, which is at $75.61, 12 million shares. $4, $4.50 back down to lows would not be a whole lot. Of course, I think a lot of these stocks like AZO and those are kind of testing these lower boundaries, probably going to pull back a little bit. Mostly on the news that a lot of the loans now for the U.S. car makers are now getting back into subprime loans on those cars. A lot of people are thinking that it's going to take a little pressure off of cars basically falling off and being repaired instead of taking to the junkyard. AutoZone, of course, it came down on huge volume on, what was that, on Friday? Yeah, Friday. Big candle, big volume, but I think a lot of that was on the belief that at least auto sales are getting a little bit better and taking a lot of pressure off cars being repaired instead of replaced in the marketplace. We've got about a minute, and I wanted to go through just before the end of the day here. Now that we've had a few days to actually think about infinite easing by the Fed, when I was learning to fly, one of the things they teach you is that your wing can continue to make lift at an angle going against the wind for quite a while. And if you add more power, the bigger the angle you can take. But even in my little Cessna, eventually you get to a point where you can continue to add more power, but it doesn't matter. You kind of just mush through the air. But what you find out is at one point you're mushing through the air. It doesn't matter. You've added all the power you can. The only thing you can do is push the nose down. You may even be descending with the nose up high. It's called getting behind the power curve. And when you do that, there's only one thing you can do, and that's drop the nose of the plane and gain speed. Last week, what we found out is that the FOMC was willing to put us in that position. We are going to either fly or fail. We are below the power curve. See you tomorrow.